All right. I saw all the analysis you guys did and sent to the group. You guys are doing amazingly. I'm impressed. You guys are trying. Okay, so let me check what I sent. Okay, I gave Victor Ethereum USDT to analyze. All right, so Victor, please, you share your screen with us now, and let's see your analysis and explain how you got it. If there's anything to be corrected, we will. If there is none, we will
Sir,
applaud. Yes.
sir, please, I don't know if you can give me a few minutes or someone else can come up. Let me set up my laptop. My laptop is still boosting. It will take some few minutes.
Okay. All right. All right. So in that case, we move to the next person, and Sneaker B24. I believe that is Murphy, right? Okay. All right. So please share your screen with us so that we can see what you have done. You posted some things at the group. That was very good. Yeah. Okay. GBP USD. All right. So please.
About saying now I'm using phone. I don't know how it will look like. And it will be kind of, I don't know, so I'll try.
All right. Let's just see how it goes. Just try. If it didn't work, then we'll know what to do.
I'm trying to figure out how I'm going to share my screen.
Okay. You are using the app. The app is there no share screen on the app? Like you are supposed to see a button that prompts you to share your screen with us. Okay. If it's not, just check if you can see it.
No, sir, no, sir. Do I have to switch to the web?
Maybe I'll make a video to show you how to do it over the phone. All right, let's so Debbie, over to you now. So while we are waiting for Victor, Deborah is to analyze Sol USDT. Okay. So are you ready for us?
Yes.
All right. So let's have it.
Can you see my screen?
Okay. It hasn't come up yet. So But you have shared your screen, right?
Yes.
Yes, I like the comment. You can see your screen now.
Okay. Okay, so this is so USD. And the day I analyzed this, I think the I analyzed this, the market was around um, let me see. The market was around this area, heading towards heading it was going upward. So I drew my I took my rectangular tool and drew a rectangular box here, saying that it's going to hit a resistance here, face a resistance here. Oh, was that what I did? No, the market had gotten to this place already. The market had gotten to this place already. So what I now did was, now it was from here, and I took my analysis. So I marked this place, this my profits. I took a sell entry from here. So looking at this, taking it from this second red candle stick, yeah, and from what you told us for supply, I think that's under supply and demand, where it's more like an impulsive sell, where you see three bearish candlestick, or you see three bullish candlestick. That's either an impulse move. So looking at this, at that time the market had already formed this third candlestick, because I didn't come online on time. So I marked this place and I took a sell entry, that this market is going to go down and hit this place. See where I see the first place I said the market is going to come down to, this place. Now, why did I say so? When I went to check the previous, how the market trend has been or had been, I saw that it took an upward trend from this place. This was the only place I could place my hands on that looked like a support zone, because the market came all the way from here. This is a low, but no other um no other support zone around this place really. So when I checked more, I just saw that okay, the market came down to this very lowest points. So I now analyze that okay, I'll take my support from this place down to wait for it, for the market here. So that's why that's the reason when I placed my sell, I took my sell position, I said that the market will come down to this place. But unfortunately, I don't know if it is too far. The market did not cross this place. So yeah, all through yesterday, the market was just facing this resistance here and there, and it didn't cross. So now, this is where the market actually is right now. So the market is just like a range, is maintaining a range around this place. It has been here since yesterday. After this sharp sell, this downward move, it has been here just like a range market. So, but for this, why I put this second um, TP and SL is because when I saw that the market had fallen to this place, the market had already faced this resistance. I was not online to take this entry from here. So saw that, but I'd already known that, okay, this market is a sell market. So when I came online, I saw it around this place. So I said, okay, I don't know if this is right. I think Mr. Praise, you will help me with this or correct me. So I said, okay, instead of me to just watch the market like that, let me enter the market at the current market price, knowing that this is a sell market. So that's the reason I now did this and entered at the current market price as at that time, hoping that this point for me to take profit, but unfortunately the market did not cross the zone. So this morning now, when I turned on my laptop, I went to check why the resistance, why the support here. I saw that, okay, the supports, this is like, I don't know if I would say this is a low or this is a support. I cannot call this one a support, but there is a low here that the market is looking like is maintaining. So it's not crossing this point at this level at this point. So this is what I can say for now.
Right. Did you take the entry?
Yes, I took this entry. That's what I now sent to the group yesterday. But when it got to that 23% from this place, that's when I now took this entry. When it got to the 23% that I sent to the group, it did not cross this place again. So it started it got to this place and it didn't go
You
further.
exited the market.
That's where the market has been since, like a ranging market now. Yes.
Okay, that's a good one. That's a good one. All right. Your analysis is great. You did a good job,
Thank you, sir.
and you also made profit from it. That's
But the
quite
profit, you
commendable.
know, see the profit, the checkable profit now 10.
Um, it's because of the amount you used to trading. A win is a win. It concerns trading, every win is worth celebrating, right? So
Yeah.
that 23%, if it's 23 cents, it means maybe you traded with maybe $1, $2, all those ones. But the same way,
Oh, I
when you
traded
master
with
the
17. Oh.
okay, 17. Now, when you master the art and you have mastered the entire system fully, and you know that for every 10 trade you place, seven, uh, 7 to 8 of it is going to be successful. Even though you are using $10 to place the trade and it's giving you $1, $2 profit for that particular time. The moment you lay hold on a bigger account and you still maintain that energy, you'll be making bigger profit, right? So the goal is
Yes.
not the profit first. The goal is mastering the act of making the profit.
Okay.
Yeah, so you did well. People. It's
Thank you, sir.
okay.
So please, I want to show you this place so you will check it for me. I saw this pie. I did one analysis. I just saw it, not like deep analysis, but I just saw it like to take it as can I take this point as a tweezer button? That's what I want to check. I want you to
We are waiting for it to
confirm
load up.
for me, please.
Let the chat load up. Seems like your network is a bit challenging.
In this place. So yesterday, that day you finished, day before yesterday when you finished the class, I saw this place and marked it. Looking at this red and green candlestick, you said, "Can I take this place as a tweezer button?" Can you see my
Yeah, I
screen,
can see.
sir?
I can see your screen. Okay. Third,
Hello, sir. Yes.
how do we
I
identify
took this place
user
as a
button?
tweezer. It's when two candlesticks, they are equal.
Yes.
They are equal and forming a low at the horizontal support level.
And I also mentioned that user button usually form at the bottom of a downward trend.
At the bottom of the downward trend.
I mentioned that you can go refer to the video again and check.
Okay.
I said that
Right.
a teaser button come when the market is trending downward. The extreme of the trend. Once you see a teaser button, it may indicate a reversal in the trend, right?
Yeah.
So if we follow that definition, that point you marked as squeezer button, is it the extreme of the chart?
Okay, I think it is not.
Right?
I don't think it is.
You guys can see my screen, right?
Sam Radio.
Yeah, I'm coming. This is the point. Debbie, can you see my screen? Debbie, still here?
Yes, I can hear you, sir.
Can you see my screen? Confirm if you can see my screen, everyone.
I can see your screen, sir.
Yes, I can see your screen.
Okay.
Okay.
See your screen.
All right. So this is the point you mark in your this thing, Debbie, right? For the tweezer button. And then now, excuse me. If you observe very well, you discover they have equal low and almost equal high, which is what tweezer button is. But the definition also says that tweezer button happens in a downtrending market. So the market ought to be trending downwards, which we can see this was actually a downward trend. If we take it back, you see that this market has been trending downward, right? So that is one criteria we need. So the market has been trending downwards to this point and to this point, right? So now the market came to this point and gave us a tweezer. So your question now is, should we call this a tweezer button or what? That's your question, right?
Yes.
All right.
Yes, that's my question.
So I'm going to ask you a few questions, then you will answer the question for us if it's a tweezer button or not. First condition, the market is trending downward, true or false?
True.
Okay, so another condition for a tweezer button to be accurate, it has to happen at the end, the bottom of the downward trend, indicating a possible reversal. So the question is this one, did this one happen at the bottom of this trend?
Yes.
And it is a tweezer button, true or false?
Okay.
So as long as
Is a
first,
tweezer button.
yes, as long as the market first, if it happened in between, maybe in between the charts, let me give you an example. Like this is a downward trend. So the bottom at this point of the chart is this point. Let me mark it out. This is the bottom. Before this other side of the market was formed, if the market is still here, all these parts have not been formed. This is, let me take it like this. So assuming the other side have not been formed, this is the only part that have been formed. This will be the bottom of this chart, right?
Yeah.
Now, if we now have something like this, this is no longer the bottom, and this market now, this is the bottom, but it has have some other stuff here. Now, if you pick up this and put it here, you discover that we have something like this, similar to the tweezer button at this point. Are you seeing it? Equal lows, or rather, this one is equal highs, right? But this cannot be possible even if we have equal low. Let's look for the one that have equal low. Even if we see something that have equal low, like this one here, almost identical low like this, we cannot call it a tweezer button because it did not happen at the bottom of the chart. So this one will not be a tweezer button. Then for this one that you marked out right here, it's qualified to be called the tweezer button because it's happening at the bottom of the chart over a period of a downward trend. And this symbolizes most of the time a significant reversal of the trend, meaning that, okay, buyers are now taking charge of the market. They are about to take over the market, and you can see how the market moves. And if you were to take this entry, where do you put your take profits? Maybe you took this entry from here. Where will you? Okay, I'm going to put some stuffs here. I'll put one, I'll put two, and I will label them. I will say I'm going to label them, right? Target. Okay. I'm going to call this one target one. So now between target one and target two, Where do you think I'm supposed to put my take profit if I'm taking this entry here? Assuming I took this entry from this point, where do you think I'll put my target 1 and target 2? Uh, where do you think I'll put my entry? Sorry.
And from the second bullish candlestick.
So yeah, is my TP supposed to be in target 1 or in target 2?
Target 2, because that's the highest point so far.
Target 2, okay. So if we are taking target 2 as our take profit point, what's the reason for that decision?
And it's because of the previous, I remembered you said that because of the previous resistance, that previous high. So that's
Yeah,
where we're
so
looking at it.
we are talking about this move,
Yes.
right? Exactly.
Yes.
So your target point should be the high that caused that particular leg, that formation of the tweezer button. So this was the high, the single move that caused this thing. So if you want to put your target, it should be at this high. Now you can see that if you actually obey that, you TP would have been hit. There are other places you can target like this high, right? But remember what I told you, if you want to do it like that, then you can put multiple entries. Put one target here, put another target here. And when you hit this target, you break even the next one. Now you can see that the market actually got to your target and just crashed downward and started going down again and again and again. Now, remember the definition of tweezer button, a possible reversal. They did not say a guaranteed reversal, a possible reversal. But in this case, the market refused to reverse the trend. But even though it refused to reverse the trend, you could have still hit your target if you follow the principle that I've shared in the class. You see that your target would have been hit before that reversal took place. If we trace other tweezer buttons and take the entry using the same principle, you see that our target most of the time will always be hit before the market will take the next turn if the market should fail to reverse. And the reason why the market failed to reverse is because it could not break this previous high. This was the previous high, right? The lower high or higher low. This was the previous one here. But the market failed to break above it. Remember that for the trend to change, you have to break the previous high above, come back to test it and keep going, forming higher highs again. But this one failed to do so. That was why the market crashed back. But it could not. There was no force to break through that zone. So yes, you identified your tweezer button accurately. That was good. And for your SOL USDT analysis, you also did well. I don't think I have any other thing to add to it. The analysis was okay. You took your entry around here. You missed the first one, then you took the second one around here, and then you made 23% return. That's quite impressive. So that's okay. You guys are doing well. Yeah, no problem. All right, so over to the next person. Victor, you said you are ready for us.
Yes, sir. Yes, sir.
Right, so share your screen with us.
This was a downtrend from the 4-hour time frame. Coming from the 4-hour time frame, it was a downtrend. So I use the 4-hour time frame as the bigger picture. So it was a downtrend. Is a downtrend. I mean, so I went to the 1 hour to draw the analysis.
Okay.
So from the 1 hour, I marked the two last break of structure to the downside. This was the number 1 break of structure to the downside, and this is the last break of structure to the downside. And here is my zone.
Okay. That's your point of interest.
Yes, my point of interest. I mark it, then I mark the fair value gap. So I'm just waiting for market to come to my point of interest. Then
Well, the market is already in your point of interest. What are you still with? You will miss this, and you have already missed the entry because for this analysis you did, your fair value gap is your point of interest. That 1 hour support zone that you marked, the market most likely will not enter it. Instead, it will dip into the fair value gap and turn back. But most times it does enter. I'm not saying all the time. But if you don't want to miss entry most of the time, it is safer to take your entry from the fair value gap and then you take your stop loss above the zone. Okay, let's hear what you have done.
I was expecting it to pull back. I was expecting it to pull back to my point of interest. Then I will go to 15 minutes and look for confirmation, then enter the trade. So that is what I'm expecting.
So all this analysis will confuse some of these people for this group.
Actually, this is supply and demand.
Yeah, I know. What I'm saying is your analysis is great, right? Your break of structures, well identified, and all that. So yeah, okay. Your analysis is great. I'm not saying it's wrong. It's good.
Thank
You
you,
mark
sir.
your break of structure effectively. You identified your zone accurately as well. You mark all your point of interest well. And since it's a downward trend, we are looking for a selling opportunity. So
Yes, sir.
you did a good job. I'll give you that. All right. So
There is still
on
others.
yeah. Let's finish with this one.
There is still others I mark in correcting pairs.
Okay, hold on. So now, the only thing I'm seeing here is that you will most likely lose the entry, or maybe you have missed it because of market did not enter your zone, right? But one of the attributes of a disciplined trader is if you have your set of rules set up and the market did not meet those set of rules, then you are not taking the trade. So if your analysis says you must, the market must enter that zone before, and that SZ that you wrote there, is it support zone?
That what?
1HSZ. What does the SZ
Okay,
mean?
means supply zone. Supply zone.
Supply. So since your analysis and based on your own thing, you said the thing must enter your supply zone. So as long as it's not inside yet, you can leave the entry, right? You take the entry when your analysis when the trade traces back to that point. All right, that's good. You did a good job. All right, let's see others that you have done.
Okay, sir. This 15 minutes zone. Also, this is a demand zone for me. This was a downtrend, and this was the last. I don't know if you are. This was the last break of structure to the downside. This was the last break of structure to the downside.
We are still seeing your Ethereum USDT trade.
It's already showing.
Okay, you have switched it already.
Yes, sir.
We can't see it just yet.
I can see it too.
Okay, you can see it. Oh wow.
Should I end the
Okay,
screen and start
maybe.
again?
No, others can see it. Maybe it's my network. Just
Okay, I was explaining that this was the last break of structure to the downside, because from here it was a downtrend on the 15 minutes time frame. It was downtrend, so I marked the last break of structure. Then this was the market structure shift to the upside. I marked the next break of structure to the upside, and I marked here I have two demand zone. So I'm just waiting to see which one market we respect between these two. Then one market respect, I will enter the trade from there. That's what I'm waiting now, just to see which one market will respect between these two break of demand zone. Then I will enter the trade from there.
all right, but I'm not seeing what you are doing. So maybe you end the screen and reshare it so I can see what you are saying.
Okay, sir.
Right.
Is it showing, sir?
Yeah, I can see it.
Okay. I was saying, like, this was a downtrend for me. This was a downtrend, and this was the last break of structure to the downside. The last break of structure to the downside. So the next one was the market structure shift. Then I mark another break of structure pull out, another break of structure again. So this market, I have two demand zone here on the 15 minutes time frame. I have two demand zone. So I'm just waiting to see which one market will respect between these two. That's what I'm waiting for. Then I will enter the trade from there. For now, I don't know which market will respect, so I'm just waiting to see which of the market will respect. Then I'll take my entry from there.
All right. Your analysis is good. Analysis is good. Okay. All right. So this is GBP USD, right? Okay, GBP AUD.
Yes, sir. Yes, sir. GBP AUD.
All right. Let me pull it out. Okay. So you can end your screen. Let me show you something.
Okay, sir.
Okay, so this is the GBP AUD, right? You can see it from your end, right? So, firstly, we
Yes, you can
have
see.
structures. Okay, we have structures, right? We have different structures according to how you have marked them. We have different structures. But there is something I want you to notice that the market has been doing. Market have been giving us this. Market have been doing this. I will fine tune it. Market have been doing this. So currently, market is here. Okay. So Victor, right? You can see a consistent pattern in this move. When the market uh, breaks out of this range, it goes up to this direction, right? So it goes to this point. It entered another range. You see that it was the same size. Then it broke out of this range. So this one was a bit longer, right? So in as much as you are waiting for your zones, you should also sometimes understand the pattern the market is giving you. So if this market, like you can see here, it has broken outside this range now, it's going to go up again. So the possibility of returning to your demand zone that you have marked is slim. The reason why that is because if you go to the higher time frame now, you will see that this market, this is the all-time high, current high of the market, right? The current high until it came over here like this. This is the high, so it was rejected. But if you notice, the market faced in 4 hours, it faced a rejection up with this fat bullish candle that is being formed. So market is giving us upward move vibe from here. You can see. So if this market successfully breaks like it has done in 15 minutes, and now you can see this tiny retracement and going, then we can target this point at our target point, like where we will take profit. It's a short entry anyway, but you can mark this place as your entry, your take profit, a short buy, right? Because you are not sure if it will break this current high, but you are sure that it will get to it. So your analysis is good. All the points you have marked out, your break of structure, market structure shifts, all of them, they are perfect, right? They are perfect. So that's good. I'll give you that. You are doing well. All right. So kudos to you and to everyone that is doing the analysis well. You both are doing well. So Victor, well done, eh?
Thank you, sir.
Well done. Okay, so for those of you who may be how is it called? Who may be confused about some terms that Victor used in his analysis, there's no point to be confused, right? We have next week. I was going through our curriculum. Next week we have technical analysis, introduction to technical analysis, right? So most of the terms that you hear Victor use, we are going to start using them from next week. Terms like breakup structure, market structure shift. You already know supply and demand, fair value gap, other blocks, and all those points. You will start using them from next week. That we also learn that next week. The topics we have are indicators versus price action. Then we talk about some indicators and we apply them to trading before we now do other things as time progresses. All right. So, Murphy, do you think you can see do your share your screen, or let's leave it for next week?
I'll say let's leave it for Mexico because the phone I'm using now, I think it will be stressful. I wish it's a laptop now, it would be even more preferable.
Uh, no problem. It's okay. Kudos to everyone. All right. So others could not join the class. Maybe they have network issues. Others have different challenges that have caused them not to be able to join. But no problem. For those of us who have joined the class and we have shared our screen, well done. And when you do your analysis and you see an entry, opportunity to take a trade, always take it. Whether the trade fail or not, it will be giving you experience. And every time your analysis fails, you should look at this chart and be like, okay, did I do something wrong, or is just the market being market? Because no matter how good your analysis are, the market will always be the market. There are times that the market will not agree with you, no matter how good you are. So if you check everything, did I enter this market because of fear, because of greed, or did the market just decide to fail? Or did I omit any of my my rules? All those kind of stuff. So by the time your market fails and you do that, then next time, if you are the one that made the mistake, next time you now know where to adjust. By so doing, you'll be growing and you'll be getting stronger and stronger and stronger. Any question? Maybe you have a question you love to ask. Yes.
Yes, I have a question.
All right.
The question is when you are reading a chart, most maybe you are waiting to take your entry. Must you read it from where the candle is moving at the moment, or is it advisable to? I know it's advisable to look back and see how the trend is. Then maybe when you are looking at the chart, maybe you have not been seeing a supply zone or a demand zone or a tweezer button or any of the bullish candle. So my question is, will you have to wait and still watch the chart more, or that's my question.
Come again. What's the question again?
My question is, maybe you are reading a chart.
Mm.
Maybe the chart is in, for example, a 1 minute or a 5 minute chart. And maybe you have been looking at the market, you have been looking for your sign, maybe a tweezer button or any of the bullish candle or maybe a supply zone, but you haven't seen any. So when you are waiting, maybe the new price then give you maybe a bullish arami or something, a tweezer button. So is it compulsory to analyze from there?
Okay. If it is supposed to analyze from the point at which the market is giving you the buy or the sell signal.
Yes, yes.
Okay, firstly, analysis is you trying to get the direction of the market, right? So when we do analysis, the reason why we are doing analysis is to get the direction of the market. So if I want to get the direction of the market, I don't have to start from that particular point. For instance, this is where the market is currently, right? I cannot start my analysis from here. I have to look backwards to see what the market have been doing. So from here, it is after I have looked backwards, I will now know the decision to take from here. So for example, now I can begin to now look for maybe a demand zone that I will use. So if I mark this point as my demand zone, for example, let's fine-tune it a bit. So if I'm marking this point as my demand zone, it means that I'm expecting this market to move downward to this zone, right? So if that happens, this is where I want to start looking for buy opportunity. So if I see things like break of structure again here, I cannot decide to buy from here. But right at this point where the candle is, you cannot make your analysis from where the candle is. You have to take it backward to do your analysis and know which zone is safe to take an entry. So you wait for the market to come to that zone that is safe to take an entry. I don't know if you understand what I mean.
Yes, I understand. Now,
Yes. Yes. So if the market is here, you must not take your analysis. You can't even do analysis from here. It's not possible. The analysis is you try to know what is the market behavior. So based on the market behavior now, we want to say, okay, where do we have likely possibility that there are enough buyers in the market at that point? So you look for maybe other blocks, you look for fair value graphs, you look for your demand zones and any other thing based on your strategy. So when you get that thing, you will now mark it out. Then you wait for the market to come to that zone. So when the market finally gets to that zone, then there are other parameters you want the market to give you before you will take the entry. Maybe a structure shift in the lower time frame, maybe a double bottom or a W pattern, any of them. You want the market to give you a particular structure in close to that your zone that you have marked. So when the market comes to that your zone and gives you that structure, then you cannot take your entry and put your stop loss lower than that. But if you do the analysis from this current candle, there's nothing you can get out of it because you don't know what's up, don't know what is this candle is just here. So it is the overall of what the market have done already that will give you insight to what the market is likely to do again.
okay, sir.
Yes. All right. Any other question?
So I have a question.
All
Please, I
right,
just
go on.
want to quickly. It's not really kind of directly related, but I want to just to know. If, for example, you check the
Check what?
trading for a particular a coin or pair, you see that the price of that coin has gone to, let's say, has done like is let's say like is in $4, but when you go to perpetual futures is in $3. Is it that as at that time that market is in $3 in futures, is it that it will still rise? There's a potential that it will rise to meet that $4 that is in spot, or is there a different market?
Again, I didn't get your question. It was cracking and coming up.
Okay, so my question, I'm asking, I said, take for example, you are checking the market on which pair or which coin to trade for the day, and you check the spot market for a particular coin, you saw that, oh, the price at the market for spot is around $4 for that coin, and now you check futures, the price is still at $3. Is there a tendency that that price will rise to $4, that you can take advantage of that price, seeing the fact that you have seen $4 here and it's still $3 here? If you can you take advantage of the market at that point to say, okay, if it rise to $4, or there are different markets price at that point?
Answer your question. If you take that approach to trade, you may be wounded because firstly, the spot market and the futures market, they are not the same, right? The future market is like forex trading. Remember the definition in our first class. We said you are buying at a future price, so you don't know the price yet. Even if you are seeing the current price at maybe $3, there is possibility that that price may rise up to $10, $20, $15, $100, the case may be, but you don't know yet. You understand? It is your analysis that will not give you the leverage that, okay, go ahead and buy or don't. So if your analysis did not give you an entry, you shouldn't use the idea that because this thing is $5 or $4 in spot, and now it's just $2 in futures, I'm going to buy it until it gets to that $4 equivalent. No. In futures, you have to do your analysis. It is your analysis that will determine if you are taking that trade or not. Because if your analysis is accurate and you take that trade, there's possibility of that thing rising even above that particular price. But if the analysis and the market should say no, then the thing can fall from that particular current price and start falling down. So that's not the approach you use to trade. Understand that? Right. So, any other question? Right. So, in the absence of any other question, we are going to end the class today. And I will try to make sure to make this today's recording available for you guys on time, so that you can also go through it again, see your analysis, see the analysis of others. You may have something to say. You may see something that you didn't see before. That's the purpose of this, sending you a recorded version so that you can read. When you go through it, sometimes you can see what you were unable to see during the class, either because of network or maybe something distracted your attention at that point, and you can see it and be like, oh, okay. Then if you have a question, you cannot drop it on the group and it will be attended to, right? So that is it for now. Well, I will see you on Monday while we keep talking on the group chat. All right. Stay safe, everyone.
Thanks, sir.
God bless you.
Thank you, sir.
Oh, my brother. God bless you.